Well, Public Storage and Extra Space have just announced their earnings. Public Storage just had their earnings call. And oh, by the way, Fed cuts rates by 25 bips. What does this all mean for you and the future of self-storage? That and much more today here on the Self-Storage Report. I'm your host, Chris Berg, head of land acquisition for Abernathy Development, also your AI storage guy, which is becoming more and more prominent, which we're going to talk about here in a moment with the Public Storage earnings call with the one and only, my special co-host, Thaddeus Campbell with S3 Partners. Thaddeus, great to have you with us. If you don't mind, I'm just going to jump right in because you and I both literally just got off the Public Storage earnings call. I think my headline are a few things. One, Public Storage really opened up the show, if you will, by saying, hey, guess what? We are leaning into our digital platform. We've now reduced labor costs by 30%, which you look at the cuts with Amazon, which we're going to get in later in the show, I think is really intriguing. But the contrast specifically in storage, I remember Joe Margolis specifically in Vegas at SSA saying, hey, we like our on-site managers. Like, we think that's an important piece of the puzzle. We think that's really good for us. And yet now you've got 2 straight quarters and really all 9 months this year with ES, Extra Space, having a negative NOI. Public Storage, not a great performance this quarter, but at least a flat NOI. And I think a large part of that's because they've been able to really manage their expenses by reducing labor costs. That's one. The other thing I want to have you jump into as well, they talked about development on the call. They said, hey, look, here's the reality. Development is going to be really, really tough. They're not saying just through 25 and 26, but probably even through 27. Now, that's the bad news if you're in development. The good news, obviously, is, hey, if you can get something in the ground and actually get some sites entitled and moving, you're going to put yourself in a really, really strong position because supply is going down in such a dramatic fashion. That's my headline. You say what?
First of all, I say I retired my blue jacket in protest from you last week, not loving my new nickname for the show, the Blue Jackets. You're sticking with the storage homies.
100%.
God bless you. I'll say this to our audience, though, for all the 18 to 12-year-olds out there that watch our show, he does not know what 6'7" means. So for him to call our show storage homies, it just doesn't work. For any of you that are my age and have kids that are teens, that might actually mean something to you. I'm going to go back to being serious now. We are officially the Self-Storage Report. No more nicknames. The earnings call, you and I, the same thing jumped out, right? They're Public Storage, obviously leaning into what we've seen across everything, right? And we're going to cover this in other pieces of the show too, but technology is really impacting the bottom line and the ability of companies, especially companies the size of a Public Storage, to lean out operational staff, right? And so I think we're definitely seeing that that's a trend that's not going anywhere.
100%. Anything else that jumped out to you from that call?
600 million in retained cash post paying all paying investors and shareholders their dividends. They got $600 million in cash on hand. So, we've been talking over the last few weeks. Extra Space went out and pulled 800 million, SmartStop 350 million. Public sitting on $600 million a quarter in retained cash. So this ability, and what jumped out at me, Joe Russell was talking about, they bought $5 billion worth of properties in 2021. They're at $1 billion so far this year. They would love to be buying $5 billion worth of property. There's not the ability to go buy properties in the way they did in 2021. It's something I found fascinating. Someone asked them, we obviously had to get ready for the show. You hung in a little longer than I did, but the last question I heard, someone asked him to talk about cap rates. And he was like, yeah, we're buying in like the 5.25 to 5.5 rate. That's what our cash flow is going to be off these assets. And we're going to stabilize at 6. Now, think about that and one of the things he referenced was their access to low cost capital helps them perform in the market. Well, if they can buy an asset that's going to stabilize at a 6, and if you go out to a traditional banking lender, you're going to get 6.5 for your rate. They're going to win the game, right? It goes to the story that I've been talking about for a while, is that this speed of consolidation is only going to accelerate.
And just to sort of put a button on that, if you remember when we talked about what SmartStop did with their Maple bonds, those Canadian bonds, I mean, that was below 4. Like, that's just a different game to play, right? Like, you start to really understand the cost of capital and you go, okay, they're just playing in a different game. So I did.
Go ahead. Sorry.
No, go ahead.
I was going to say, I got a chance to talk to Alex Giangrande today, earlier this week, who is the head of development construction and one of the people involved in acquisitions for SmartStop. And he spoke to that. He said, "Hey, we're out here trying to find sites because we have the capital to deploy. The challenge today in storage is not the capital to find sites; it's the sites to be able to buy." So, and that's goes back to the same premise. We have multiple parties out there. You've got Merritt Hill, you've got Prime, you've got CityLine, you've got Public, you've got Extra, you've got SmartStop, you've got NSA. They have capital at a place where the general public can't get it. It's only going to speed up their ability to go acquire assets.
Well, I want to get into the extra space earnings here in a moment, but you're bringing up such an interesting uh, point and appetite. And I say this because I talked to some capital guys this week, and you start to talk to institutional guys and like, hey, we really want to get into storage. I've got a couple hundred million to deploy, and they're just like, I can't deploy a couple hundred million right now. Like I can't take that big of a tranche and actually go execute it effectively for you at this particular moment. And then we get into, hey, incentives, show me the incentives. I'll show you the results. And there was a big conversation in Newport when I think it was either H. Michael Shorts or one of the people on the stage was like, if you guys are going to keep selling at 4 and 4.5 caps in some of these deals, and of course people are going to keep building, right? They just see these numbers going 4.5, like I'll keep it. And so we're almost kind of our worst enemy. There's so much capital. There's, guys that are going out because they've got to deploy it, buying things at really low cap rates, and people just go, well, then I'll keep building. And now we see where we're at, where things are fairly stagnant. So if you want to put a button on that, great. Otherwise, I'm going to move on to extra space.
Yeah, go. Let's talk Extra Space.
I want to get into extra space because you had the conversation with Noah Springer, the chief strategic officer. Again, great interview. If you haven't seen it, definitely go check it out. That had a phenomenal interview there. I just, you and I were kind of banging the drums, and we had that quarter, it was last quarter, when every single read, except for maybe SmartStop, and that's the first time they really reported, but had negative NOI. And they're like, man, that's the first time since the GFC that all these guys have had negative NOI. But now I see 9 straight months, 2 straight quarters of negative NOI with extra space. You just got to start to wonder, like, hey, how much longer are they going to play these super low rates ECRI game? And is that the most effective revenue management strategy? Because Noah said it in your interview, and I can't tell you how many times today in the public storage conversation in the earnings call, like it was all, look, we are maximizing revenue. We are maximizing revenue. We are maximizing. I mean, that was the drum that was being beat. So I'm just curious from your perspective, and after your conversation with Noah, you see 9 months of negative NOI. Do you start to go, do we start to move our strategy here or what?
So I had a conversation this week with Matt Lang, right, who's president of Go Store, and we were talking about this generally, not specific to Extra Space, but generally to the market. And one of the things that he said is there's a lot of things going on that affect a lot of markets in the country in a way where those rate reductions very well could have been necessary. The trick is figuring out which ones, where it was necessary and where maybe it wasn't necessary. And the simple fact is that there was a broad brush, right? That was a pretty broad stroke strategy where entry level rates were cut across the board. And so there are real reasons for it. In 2022, 2023, as occupancy started to drop. But here's the reality of Extra Space. Their occupancy is at 93.7%. The historically in storage, 85 was really good. So, I mean, they're almost 10 percentage points above what would have been considered really good occupancy. So, long answer to your question that could have been shorter. I think that Extra Space understands that they can't keep doing what they were doing in 23, 24. And so I think that we're going to see entry level rates, web rates, street rates online, much more reflective of what their expected top end is in a store.
Yeah, I think, go ahead.
I was one thing that Matt said that was fascinating to me is the days of gross potential rent in storage are over. This idea that there's a number that we think we're going to get to is no longer something people are going to be underwriting to. They're going to be underwriting to street rates and web rates. In other words, there's not this ability anymore to say, hey, that's a $30 market when the rates you're seeing online are 25, right? You're gonna see underwriting that's going on the available data.
Well, yeah, and I think you have to. And as we talked about this last week with the appraisal situation, I think, and it's probably never been explicitly stated, but I got some really good feedback from people very well known in this industry in regards to the thesis I laid out last week with what's going on with one of our sites where, hey, one of the sort of unspoken things around extra space lowering these rates so much is that when the appraiser comes in, he kind of goes, look, they may have, 5x what I'm seeing here publicly, and good for them, but I can't prove that to a bank, and I'm not going to put my neck on the line and appraise its asset. It's something I can't verify or see. Point being is that when they've got these super low rates, you can't get things appraised. That also constricts supply. And I do agree with you that I think because you got that many months in this, especially in this industry that's been known for very steady positive NOI, where you got negative NOI. I'm not in Joe Margolis's head, but I got to believe there's some conversations going on in the locker room, kind of going, "Hey, do we start to maybe bump up these street rates again?" Especially with what's happening with SB 709. And I want to put a button on this because a big part of the public storage conversation, since we are now the storage homies, West Coast, right?
Apparently, my previous speech didn't land at all. You listen
Not at
as well
all.
as I
That
do,
was like
Chris.
in one ear, out the other, because I love storage homies. So
Oh, good
West
God.
Coast. And so, anyways,
6'7", brother.
let's
6'7".
get talking about. Hey, we love the West Coast from Seattle to San Diego. That's going to be a wrap coming up pretty soon. There from Seattle to San Diego, we are loving what we're seeing with our assets in that
Did
particular
you
range.
catch 1/3 of their NOI is
Yes.
Seattle to San Diego? What an amazing statistic that, I mean, Public Storage obviously started in California, so it makes sense that their growth was, on the West Coast, but they're so big now that for them to have that big of a presence on the West Coast, really, really incredible to me. That stood out in the call.
Yeah, man. We need like a Tupac hologram to like get to develop like a little West Coast public storage wrap, man. So, with all that being said, I think it was interesting to hear the good news about the West Coast. Me being here in California, there was a large conversation about LA, the rates now that have been capped because of the emergency with the fires. And I wasn't aware of this, but apparently Governor Newsom could still extend that potentially in January. I don't see that happen as he's getting ready to, make his run for president. But it's still a variable that people have got to be aware of.
Yeah, I don't think that's going to help him in the presidential. He's clearly doing everything he can to get himself ready for the election. So I would say that's not a step that he's going to want to have people attacking him on as he goes into that race.
Yeah, and it's not. I mean, it wouldn't be a big talking point, but I just think he's going to be like, whatever, let's go, let these guys do what they're going to do, and which is great news for again in California. You talked about the street rates and the internal rates from a standpoint that I think you'd lift that on LA, you're going to see a nice bump because that has been a drag on public storage's earnings. So that'll be a nice bump, which I think could actually say, hey, there's some more positivity going on within the industry, and we'll see what happens there. So, want to give you the last word on the earnings call, and then we'll move on to the Fed.
I want to put a quick soundbite that I took two things from Public Storage. They're really quick, but I thought they were worthy of listening to Joe Russell. One of them is about what's going on with their customers and how their customers are interacting with them. Think this is worthy to listen to. I'm going to try and
Just
listen
a
to it
few
if
of
I.
many examples in terms of our operating innovation include: first, we have the industry's leading omni-channel customer experience through which we offer digital options across their entire journey. The success is evident, with customers now choosing digital paths in 85% of their interactions and transactions with us.
That was fascinating. 85% of the customer interactions with Public Storage are now digital. I have the second clip. Actually, you already referenced it. I'm going to avoid playing it, but it speaks to the 30% reduction in work hours. And that makes perfect sense. If 85% of your interactions with customers are now digital, you don't need as many people on site.
Two things. One, kudos to you and Eric, man, for getting a clip out. I mean, that was a fast turnaround. So thank you for doing that.
Thank goodness for
Secondly,
screen record on my phone.
I think what's really powerful to note there is also Joe Russell went on later in the call and said, hey, look, you got to keep in mind 4 or 5 years ago, we didn't have any digital interaction. So it shows
Yep.
you how fast things are moving in this industry. And again, where things potentially are going. I've said this, there's no proof of concept that this is going to be the case. But I think at one point, you're literally going to be able to grab your phone, hire a Tesla, go to your storage and say, hey, get my bike, bring it back to you. I'm going to go ride my bike in a couple hours. Like it's going to be that
100%.
robotic and just boom, boom, boom.
It's going to start happening very quickly. I have a buddy, James Hatfield, runs a company called Live Switch, where you're able to click a button on your phone via a text message, have a live video interaction with somebody. And what's happening across the storage industry is they're centralizing their best salesperson, and that person is able to service, or their best public relations person for that matter, they're able to service 20 stores. And what happens is that person doing that job stays engaged all day. And it's something that Joe Russell pointed out. They're having better employee engagement and they're having better employee retention. Despite contracting the workforce, you're getting a higher quality of employee, and ultimately, what does that do? It's a higher quality of service to the customer.
I want to get your take because we haven't talked about it much, just because I'm in this space and so are you. Their thesis on where development's headed. And before we get into that, again, I want to say thank you to Tract IQ, our data partner here on the Self Storage Report. They do a fantastic job. If you're someone right now, you're looking for off-market deals there, we're going to have a special where Noah's going to join us next week, and then a big special about some new tech they're going to have to help you go out there and find great off-market deals. So as you begin to underwrite, outstanding information, data up to date to give you a really full picture on how you want to put together an offensive and defensive game plan as you potentially go and acquire new assets and or build new assets. You can check them out, Tract IQ, get a free demo, let them know, hey, I heard about you guys on the Self-Storage Report. Noah and his team will do a great job at taking care of you. So your assessment or analysis on development, when I heard, hey, we don't think things are going to be slow just through 25 or 26. We think they're going to be slow through 27. Kind of made me gulp. And at the same point in time, I'd be pretty excited knowing that, hey, we're continuing to look and try to find deals to do. Assuming we can find those and get something in the ground, man, when they come out, it's going to be a really, really strong potential to be a great asset.
I think this goes back to something we've been talking about for weeks, which is the folk. And I'm very lucky, right? Barry Sherman, the president of S3 Partners, 330 ground up developments he's been involved in over a 35-year career. I point out to the Mitch Feldmans, the Tony Artizzonis of the world, the DXT Capitals. Was lucky enough to have a conversation with Corey Sylvester this week. I'm very excited to hopefully have him on the podcast here before Christmas, which will be really exciting. Those are the people that are going to succeed in this environment, the people that have a really stellar track record, that have a relationship with the major REITs such that they have access to the type of information that you really need today to be able to make decisions. Because look, you're talking about right now, when I first got into storage in 2021, we were talking 8 to 10 million for 100,000 square foot development. Today, that same project is 16 to 20 million. You make a mistake, it's a massive amount of money that you're going out the door with, and your investors. We were able to do a project in 2021 raising $1.5 million from LPs. Now that's closer to 5, because you've got lower leverage that the banks are taking. You have to raise more capital, and the projects are way more expensive. So the willingness of new people, the sort of looky-loos that came into the market in 2020, 2021, 22, they're not going to be building, I don't think. And what does that do? Well, it makes it better for those of us that have the wherewithal to go out and get things built.
Although, as I said earlier, if they continue to go out there and buy things at, sub 5, like some guys are going to be like, hey, look, I'll go for it, right? I got a 90% partner. Let's see what we can get done here. And I don't know if I've shared with you, did we talk about this where we had the big loan from the insurance company, 70% LTV, I don't think we talked about that last week though, did we?
No, but it's not news to me. I'm lucky to have a relationship with Andy Bratt and Amit Tyagi from Gantry down in Newport Beach, and those guys are the leaders in self storage with life insurance money. And they actually, I was on a call with them earlier this week, and they were talking about a $70 million loan that they did for storage. Not sure if it's the same loan or not. There could have been a different one, but that this is the reality of what's going on in the market.
Which I want to get into in a moment. I think one of this that surprised me in the public storage earnings call is they talked about, hey, our customers, they're healthy right now. Like we've got healthy customers that are renting from us. And I don't know if that jives with some of the, more recent information that's coming out. And I say that one, obviously Fed cut by 25 bips yesterday. I think what's fascinating as the time of this recording, the 10-year is actually up. I'm back above 4 after that news. And you and I have been talking about, hey, is it always great to cut the Fed rate from considering the 10-year? And that's where mortgages and loans typically come out at. So we'll see how that continues to move. I think 4 is a pretty safe, steady number that we're going to see. The problem is that enough to actually get people moving again, which is really the bloodline of self-storage? And I don't think it is.
I think the bigger problem is that in the last 2 months plus, we've seen a 50-point reduction in the Fed rate, and we've seen the 10-year stay right where it was. Now, it hasn't gone up in the way I thought it might. There hasn't been a spike. But on the flip side, there hasn't been a 50-point dip in the Fed rate either. And so that expected relief in the housing market, we saw a little bit. We talked a week ago or 2 weeks ago, mortgage prices were coming down a little bit. That trend hasn't continued. opens up a whole nother conversation that I wanted to get into with you in relation to the decision by the Fed to cut. I'm very interested. One of the things that came out of the Fed decision was when they meet again in December, if the government's still shut down, they don't have any jobs data. They don't have any data on inflation that they're relying on the government to give them. How much of an impact is that play on the Fed's decision? We know, and you speak about this a lot, that Trump wants rates as low as possible. Is there some pressure there to start ending the government shutdown just to give data to the Fed to make them cut rates? It's very fascinating what's going on.
I think so. And yet, if you listen to Powell yesterday, he's like, look, we've got the Beige book. We've got, other private data that we're looking at consistently. So he's like, look, we still have a pretty good feel. If you want to say, and I don't know if I really believe this, but that the government data is the gold standard, go ahead and say that. I would obviously strongly disagree when you look at like Poly market and all the different kind of ways you can surmise data these days to say that that's the gold standard. But again, I think Powell needs to say that because look at his position, right? So point being is, there is some validity to what you're sharing, but I don't know if that really is as opaque as people want to make it sound like, from the standpoint that those guys, that's all they do. They're sitting there and trying to hunt down data to make the best decisions possible. Does it impact December? I guess we'll see. I think there's some other data as far as Amazon job cuts and Lilly. And I mean, you and I talked this morning about Chipotle stock way down. The CEO says, look, the 25 to 35-year-old making 100 grand or less. We've got great concerns about, you can see your UPS, Amazon, Intel, Nestle, Accenture, Ford. I mean, you can just go on down the list. Like, to me, that is not a robust economy. And you can say, hey, it's only AI. I think AI is a piece of it, but I don't think it's all of it.
By the way, public storage, typically 2 managers per store, per location, 30% reduction in man hours year over year. I don't know if that was year over year, but I assumed in the way he was talking about it, it was in relation to Q3 2024. Could be completely wrong. Let's say it's over the last 4 years. That's 10,000 employees at a minimum that they have working for them. If you count 5,000 stores times 2, they may have more than that, but rough numbers, talking 3,000 people that Public Storage is no longer hiring at the same level, right? Not paying at the same level. And how many other companies like that could we throw into this chart, where these are just a list of big ones that are well known,
Well,
companies that don't get as much attention as Meta and Amazon, et cetera, are
can you
doing
bring
the same thing.
can you bring that back up, please?
Sure can.
So this was October 28th. So this was before Powell's speech. I think it's
Yep.
important to note that you can see the last line there. The labor market is clearly weakening. Well,
Yeah.
Powell stands up yesterday and was like, yeah, we feel like, the labor market's pretty steady. So again, you talk about the opaqueness of the government data and what Powell's saying versus what has actually happened on the ground. I just don't think it all adds up. At the end of the day, we've talked about this before. I think it's nuts that we're using past look back information based on government phone calls, basically, to like companies and how, what could you rent your house for, blah, 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 to make forward decisions by one man that can move a market 800. Like, it's insane to me, but that's the world we live in. You got to play, I guess, the game you're in. But I'm hoping that is going to start to change. And I say that because, as you said, look, we all know 25 bips here, they're going to cut in December. I would definitely poly market bet that. But then by May, you put in a new.
Are you giving betting advice now?
No, that is not betting advice, and I have
All right,
not.
let's just make sure we qualify that.
Not ever bet on poly market. Probably never will. And I mean, you're going to see a huge reduction, in the rate as Trump starts to put in a new Fed chair. What exactly that's all going to bear out, we will see. But as you and I've talked about before, to see the 10-year go up with that kind of news, I just think it's an interesting, dynamic that's happening right now.
It's such a fascinating thing that in this moment when we have the most access to technology in the history of the world by thousands of times, we get a jobs report every quarter that gets amended, right? Like we can't get real data when it comes to that side. I mean, and not just amended, but went from like 900,000 jobs to 37,000 jobs, right? Like it wasn't just a small amendment. It was like a totally different stratosphere of a number. Fascinating that, and going back to the earnings calls and tying this back into storage, one of the things Joe Russell talked about repeatedly during the earnings call for public was how they're leaning into data Well, here's hoping. And what's the supposed to be the benefit of having a Fed that's independent from the government is that they're getting their own data. So to your point earlier, here's hoping that they are doing a better job of getting data to make their decisions than the government is. Because as you mentioned earlier, can we really rely on the jobs reports and the inflation reports we're getting from the government? It's very hard to rely on those these days.
Yeah. I want to go to some other graphics I sent you earlier, and let me set these up and then you can bring them up. Is the fact that, when you think about when we first started this show, Thad, and we were having conversations, even with Noah, right? Like, hey, they're saying that the bottom was October 2024. Uh, we think we're starting to see rates go up here. Remember, like in January, we saw the Google searches going way up, and we're like, oh, this is really, really good news. We thought this might be an actual spike in what's going to take place in rates. Bring these graphics up, and I want to walk through these and get your take as well. That I
And
think
just
are
before I bring the graphic up, I want to point out that when you said that, I was the one that came in and chimed in and said, don't speak too soon because we might have not seen the bottom yet. Now I'll bring up the first graphic. I just want to point that out. We
so.
do call this the Nostradamus report.
Is this? Do you know what
This
market?
is Phoenix, Arizona.
Phoenix.
Yep.
Okay, and so now Phoenix has got the most incoming supply in any market in the country, I believe, or very close there too. A couple of things that really jump out to me. One is you can see that there's a new low, so that's a little bit frightening. But even as we saw the uptick in the Google searches, and the thing that I think you and I both were anticipating, and I don't want to speak for you, so I'll say myself, is that we were going to see a new all-time high, and we clearly didn't get there in June or May of 2025. Going to the next one so we can give people some more context. I believe this is going to be
This is
Riverside.
Riverside County.
Thank you. So same thing, like, closer to that ATH, but still not a new all-time high, which is disappointing. And again, back to that low, which, was right before the end of 2024. Same thing here in 2025. I think we've got
Yep.
one more in Chula Vista area as well.
Two more, actually. We got Chula Vista and Fresno.
Yeah, we can skip the Fresno one. But this
All
one
right,
as
good.
well, you can see, this one did not get a new all-time high. We have not at least hit a new or same bottom. So it's a little bit positive news. But I'm curious, based on these three, what do you extrapolate from that?
No, I think this is great information, first of all. So thanks for bringing it. But the reality is, we didn't get the lift off that people thought we were going to get in 2025. And I think a lot of that is tied to the housing market,
Yeah.
right? Now, the bright side of that is you mentioned Phoenix, and I kind of led with Phoenix for a reason to make myself look better. But the reality is, the other two markets didn't go below their all time, the 2024 low either. So there is something positive to be taken out of here that in a couple of these markets where there wasn't massive oversaturation, you didn't see that regression to below, October, November 2024, which is, hopefully it's a sign that as we go into 2026, 27, 28, we've aforementioned the development stall, I guess is the word I would use. It hasn't stopped, but it's slowed down significantly. Um, Hopefully we start to see these numbers climb back up to the type of numbers that we are going to help us get the development pipeline picking up.
Yeah, great stuff. We are releasing a new segment this week called How Faith Fuels Your Business. There's going to be a full interview that you can go watch on YouTube, but I want to give you a chance, Thaddeus, to set this up and to give some context. Obviously you and I have been talking a lot more about our faith. I think it's a really important piece of who we are, what we do. I've been part of a Kingdom First business ministry out here at my church. And then you had a great call with somebody and made some suggestions to you. And here we are about to play a clip.
Yeah, I was so excited. Cam Packtinat called me a few weeks back. Cam's the managing director of DXD, really in charge of their land acquisition side of things. He's the guy that's going out and using their data platform to find the best places in the country to build new facilities. I don't know of anyone in the market right now as a developer that's doing more projects than DXD is. So he's been doing an amazing job. He suggested to me on this call, he pointed at, he sees me on LinkedIn and across social media, and he's like, hey, I love what you're doing. It's been really powerful for me to see somebody else out there with their faith, because that's a hard step for people to take. And so he then made the suggestion, hey, I see what you and Chris are doing. Nobody in the space is talking about how their faith helps their business life. And the lights went off so quickly for me. I called you 3 seconds after I hung up with Cam, And I was like, dude, we have the greatest segment that we get to add to this show that's going to be so powerful. Of course, Cam is the one that made the suggestion. So Cam's the one that we wanted to have be the first guest. That segment will live on our YouTube channel. So you go to youtube.com/@ the self-storage report. Please subscribe to the channel. The full interview with Cam is there. I want to play a clip very fitting for what we're talking about today, which is funny because you didn't know what the clip that I picked was, but the message today has been about the challenge in the development market. And obviously Cam's job is to have DXD building new projects. So he's talking about how his faith has really helped him as we're in this moment in time in development.
The past couple years, I think when we had our initial discussion on the podcast, Dad, it's been turbulent. It's been difficult. And my main role here at DXD is to bring deals to the table. And it was, 2022, 2023, even 24 were very difficult times. It was really important at those times for me to use my faith in a way to say, we do everything we possibly can, but it's in God's hands as far as what deals we get. And it's amazing when you do that, the anxiety level comes down and you almost invite, you're working, you invite the deals that came through or the opportunities that you need.
Unbelievably powerful conversation. He went on to talk about how he brings this power of his faith, not only to his, handling of the current situation in the market, but to his family life, how he helps the young guys that are coming into his group at DXD, and he leads his team at DXD. Cam may not be Guy Middlebrooks, who for my money is the nicest guy in storage, but he's right up there on that tier with him. Cam's such a fantastic guy. Hope you guys can go to catch the full episode on the YouTube channel. Make sure you subscribe to the page. We'll be doing these interviews every couple of weeks with folks, just really highlighting how important it is to have something beyond just your job that drives you.
Amen. I want to give you the last word. Anything else you want to add or share?
Yeah, shout out to Terry Campbell and the folks at Johnson Insurance. There's a reason that we picked them to be our risk assessment partner on the show. They got an amazing award this week. I want to pull up a quick thing that they got. Johnson Insurance recognized for the best practices agency by the Independent Agents and Brokers of America. 348 agencies. To give some context to that, there are almost 500,000 insurance agencies in the United States. There's there's almost 40,000 just property and casualty insurance agencies, which is really what Johnson Insurance is. So top 1% of those property and casualty insurance companies get recognized here. Shout out to Terry Campbell and the good folks at Johnson Insurance, an amazing award that they received.
Thank you, man, for being a great co-host, making it simple. Thank you for everyone that watches and gives us feedback. We really, really appreciate it. Got some great emails as of late from the show last week because of your great interview with Noah Springer. Again, check that out with Thaddeus on his channel. And then we also want to let you know, coming up next week, the Texas SSA is taking place. We're going to have Noah Springer join us for the entire show. He's down at the Texas.
Noah Starr.
Oh, excuse me, Noah Starr. I'm thinking
Noah Springer is not joining. Noah Starr. Actually, the Texas SASA is going on right now. Noah Starr is joining us next week, and we're going to talk about that as well as the REITs earnings reports. We'll have a bunch more Cube Smart, NSA, Smart Stop. They're all coming up as well.
I'm so glad you're listening, my friend, because Noah Starr will be with us all next week. And as he just mentioned, all the REITs, I think, are done. Maybe Smart Stop's not done by the 6th. But either way, there'll be more. We'll have some great conversations, and be sure and join us then. So this is the self-storage report. I did get that piece of it right, so that is good. I'm Chris Berg. That is Campbell. We'll see you here next week.
6-7, baby.